with traditional bonds, you have to go through the traditional channels, and much like a bank, there are tons of fees involved with all these counterparties and organizations that facilitate these bond raises. And also, the places you can trade them on are very limited as well. But doing it on Liquid, you would allow for direct peer-to-peer trading. You could have self-custody, and that's a restoration of something like a bearer bond, which has been destroyed. Right? People don't want those anymore. The people in power and the legacy system don't want bearer bonds because that means they can't surveil.
Coming from venture capital, which is broken, and the CEO of Digitl and a former investment banker, we realize that everything is broken, all aspects of the capital formation life cycle of the issuer, but then the access points for the investor, which means everyone. Everyone in the world, in my opinion, is an investment buyer. We have some sellers, some issuers, some businesses, some product manufacturers, but everyone is a buyer, and everyone should be given the chance to buy. And that's what it comes back to, this disclosure concept. If it's a high risk, early stage, disclose that. Don't prohibit access to that.
What's up, Sats fans, and welcome to another episode of Swan Signal. I am your host, Sam Callahan, lead analyst at Swan Bitcoin. If you care about your financial future, you need to check out a couple of our offerings, including Swan IRA and Swan Private. Swan Private is our white glove concierge service where you get a trusted partner on your Bitcoin journey. We offer all kinds of education and research projects, as well as exclusive events to our Swan Private customers. Check it out today at swan.com/private. Also, Swan IRA. Swan IRA is the best way to gain exposure to real Bitcoin in a tax-advantaged account, like a traditional IRA, a Roth IRA, or rolling over your 401k. So if that interests you, check it out at swan.com/IRA today. We got another great couple guests for you today discussing Liquid and all the capabilities that it brings about to the Bitcoin ecosystem. If you're not familiar with the Liquid network, then this is the episode for you. We have Samson Mow, who is the CEO of Jan3, and then we have James Wallace, who is the chair of Digtl. So both of these gentlemen have built on Bitcoin or built on Liquid, and also have really helped bring it about. And so we have the perfect guest for you today to learn about it. So welcome, Samson, and welcome, James, to the show.
Thank you, Sam. Great to be here.
Thanks, Sam.
Yeah, so I was reading about Liquid, and it's been around for several years now. And I always thought it was really fascinating because it basically enables different assets to be issued while utilizing the underlying Bitcoin network, like the decentralization and the security. And Samson, you were integral to the creation of the Liquid network when you were over at Blockstream. And so for our listeners, maybe we can just go into some of the basics. What is the Liquid network, and what was your goals when you were kind of building that out?
Sure. I was actually integral to Liquid before I joined Blockstream. So,
Oh, really? Wow.
If we take it way back, the genesis of Liquid, I think, was like 2013 or 14, when Greg Maxwell and Adam Back were theorizing about sidechains on Bitcoin Talk. And it was later formalized into a white paper, and that was the basis, I think, of Blockstream's founding, which was to build on top of Bitcoin. And the first part of that puzzle was building Liquid, a Bitcoin sidechain. So the concept of a sidechain is that it's just a blockchain that's parallel to Bitcoin, but anchored to Bitcoin. So that chain has no other native currency. The native currency is still Bitcoin, but pegged into the sidechain. And by that means you have the exact same cap as on Bitcoin. So you can only create Bitcoin on Liquid if you lock up Bitcoin on the main chain. So it's always a one-to-one relationship. So 21 million Bitcoin, 21 million potential Liquid Bitcoin on Liquid. And it also came with a lot of other innovations too, such as confidential transactions, which allows for you to hide the asset type. So if you think of Bitcoin as having one asset, BTC, Liquid can have multiple assets because there's a flag for different asset types. So Liquid Bitcoin is the first one because that is what pays for transaction fees on the network. But then you can issue things like stable coins or digital securities or a game currency or anything you want, because those are simply just assets on the network that have this other flag to it. And the beautiful thing is it's default confidential. So when you make a transaction of Liquid Bitcoin, you don't really know if someone is sending liquid Bitcoin or Tether USDT or the INF game currency or a digital security. So that increases privacy of Bitcoin in a large factor. So let me see. The other thing with liquid is the I guess the well, yeah, I think I covered it. It's asset issuance and
Yeah.
confidential transactions, but also the reliable block times too. So Liquid has 1 minute block times. It's based on block signing, not on mining. So the federation of 60 plus members has a subset of 15 members which serve as functionaries, and they're running the Liquid functionary node, which is a 1U rack server that they keep in their data center, and this is signing the blocks of liquid every single minute. So you have this reliability that there's no variance. There's always 1 minute for every single block. So you can actually use liquid for things like payments at this time, but down the road 10, 20 years, it'll probably be too too expensive to do so. But for now, you can still use liquid for payments, and it's quite effective. But yeah, the role I had in Liquid at the beginning was really joining as one of the first members. So I was the COO at BTC China, which was one of the biggest exchanges back in the day in 2015 and before. So I remember meeting with the Blockstream guys because they were trying to get people to sign up for Liquid, and the first members I think were us, BTC China, and Bitfinex, and I think Streamy, which is now known as GoPax, which was acquired by Binance, and a few other ones. But we were one of the first exchanges that signed up for Liquid. So I think that's my contribution, just helping bring it into the world.
Yeah, very cool. So from my understanding, the Liquid sidechain, there's this two-way peg between the Bitcoin main chain and the Liquid side chain, and you either you peg in or you peg out. If you want to take the Liquid and then get the Bitcoin, you peg out, and that requires one of these like Liquid Federation members, which I believe Digtl, James Wallace at the company over there, is one of those Federation members that kind of helps with this mechanism to peg in and peg out. Can you explain, either one of you guys, kind of what it is to be a Federation member and what their role is between these like peg in, peg out with the Liquid sidechain?
Sure. James, you want to take that one, or do you want me to continue?
Well, yeah, we're a federation member. We're a member of the boards, and actually a functionary as well. And I think that Samson, you do a much better job of explaining the peg in, peg out, because that's a fairly technical thing.
Mm-hmm.
Yeah, so if you think about it, the peg is a sort of bridge, and there is a risk there. If you look at the world of DeFi projects and Ethereum and those types of clones, you always see that they get looted, and usually, more often than not, it's people attacking that peg or the bridge that that links one chain to another chain. The way that Liquid avoids that issue is that there is a peg out authorization list, which gives you a key. So you have to be on this whitelist of individuals, or sorry, members that can actually peg out. But the members themselves can offer that as a service to their users. So one example is SideSwap. They do liquid swap services, and if you're using their app, then you can peg out, take your liquid Bitcoin and leave the network and convert back to Bitcoin. And they do that in a trustless manner. So even though there is a dimension of permission, you have to go through a member, the members themselves can offer that permissionlessly to their users. So anybody can peg out through SideSwap. They can't really stop you from doing so. But you still have that level of security because no one can just attack the peg and drain it. Because if you look at what Liquid is, it's a multi-sig wallet. There's 3,000 something Bitcoin in it right now. And potentially an attacker could drain that. So the authorization system, the PAC system, prevents you from having a bad actor coming in and just withdrawing everything at once. Because it's only limited to the whitelisted members. And it's also not difficult to become a member of Liquid. If you think of Liquid, it's like a Fediment. Fediment is very popular these days, right?
Mm-hmm.
And a Fediment is really just you and your friends choosing to make a federation. Liquid is a federation that is made up of companies and typically exchanges. and these guys are operating servers in data centers. So you have a certain degree of reliability and uptime that you don't necessarily have with the Fedimint Federation, which may be more ad hoc and people running something in their basement. So I think the similarity is there. That they're still both federations. It's just Liquid, when it was created back in the day, it was more pragmatic to make the federation out of these robust entities rather than just a collection of people that you know.
That makes sense. I mean, it just seems like Liquid offers a lot of these benefits and additional functionality from the Bitcoin main chain, while taking advantage of some of the best parts of the Bitcoin main chain. So you talked about like faster settlements, reliable block times. You can issue multiple assets, more confidential transactions. And so, James, you guys over at Digtl, you guys looked at the Liquid network and you said, "Wow, there's an opportunity here to create a business." And so, can you just tell the listeners, maybe if they're not familiar about what you're building at Digtl, what are some of your goals over there? Because I found what you guys are building pretty fascinating.
Yeah. Yeah, one of the reasons to mention earlier, what I mentioned about the federation and the boards and the function area, was one thing that impressed us with Liquid initially was how sophisticated it was. It was a very thoughtful, and getting to know Samson, and now it's clear, and Adam and the other people at Blockstream, is very clear. That was kind of obvious, right? That these people were going to create something meticulously and with sophistication. We are essentially enabling at Digtl, enabling Bitcoin capital markets, trying to take the best of legacy and the best of crypto, and put them together. So basically, early stage digital sort of interesting investments, a lot that were previously accredited only, and giving them the sort of crypto-like qualities, such as the visibility, self-custody, 24/7 markets, etc. We just basically believe that investor protections and market rules are a necessity. And when we work, I am a self everything, self-sovereign ID, self-custody maximalist, and I really do believe that Bitcoin is the new money. At the same time, we've seen what happens when there are no market rules and when there are no investor protections, and so lobbying for reduced regulation, something that actually maximizes both those without being intrusive into privacy and otherwise, neglecting or enhancing the vulnerabilities of the market, is really our objective. So we went all the way to the end. We've been doing this about 6 years now. We spent the first 3 years working on a global, cross-jurisdictional securities trading infrastructure, and acquired several registrations ourselves, made investments in the many companies, fintech companies with significant licenses, including exchange licenses, clearing and settlement, registry licenses, so end-to-end capital markets. And that really is the core of Digtl. This wholly exclusive, meaning nothing else is required. We rely on no third party to issue, list, buy, sell, clear, settle, and register securities. And so we looked at one point, we created our own, as they say, fit for purpose digital securities blockchain. I think somewhat naively, but also out of necessity and frustration, having not found a really good, high quality permissioned blockchain. And after about 2 years of development, a friend of ours, Brad Mills, said, you have to look at Liquid Network. We had taken a look before, but it was very sort of thin, as it turns out. We went really deep very quickly based on that referral, and very quickly realized that these people behind Liquid Network were far more excited. Frankly, they were far more qualified, but far more excited about this project, and we're always they'd already created a better blockchain, and we're going to ensure that they were the best in class permissioned blockchain. And so the way that we see moving forward is taking this global cross-jurisdictional retail access, direct retail access securities framework. Liquid Network really is at the core. It is the thing that allows for issuance, clearing, settlement, registry, which is critical of digital securities.
Yeah, so you talked about how there's a big problem here, and I saw that maybe 90% of people don't have access to capital markets, which is crazy when you think about that, because access to capital markets is critical to accumulating wealth and raising money. And so you saw a problem that needed to be solved, and you looked at Liquid and you said this could actually work. And after you guys did the work of getting registrations and kind of working within the regulatory frameworks, you're also utilizing the technology of Liquid, if I understand correctly. And so, how does Liquid exactly, and maybe even Bitcoin more broadly, address that access problem that you guys talk about a lot?
Well, what a great question, and it's a multi-sided answer, unfortunately. And while I try to
Yeah.
keep it really high level, and I do like the low level details, very fun and exciting. I understand that people that are looking for just an introduction probably are going to get a bit lost. So I'll try to keep it higher end. The reality is, and I think more so than ever in human history, we collectively as people have caught on to pretty much everything is corrupted. And Bitcoin was one of
Mhm.
the earliest, I think, advancers collectively of that notion that we can't trust. I mean, our parents and certainly our grandparents trusted government and banks. And maybe back then, I don't know enough to know whether that was maybe smart and maybe um, was not foolish, right? Certainly now, I think there's evidence everywhere that it is profoundly foolish.
Yeah.
So we start with the idea that all financial systems are corrupted. I don't know that there's some cabal. I don't think we need to go to that place. I think we can just look back and say that the self-interest of the people that have been involved in capital markets and other ancillary parts of the financial system over the last 100 or 200 years have naturally led to a consolidation of power. That's almost, sort of a natural consequence of something over time. Players consolidate power. And I think what we found is a profoundly unfair system that includes a built-in exclusion. I come from venture capital. I'm a
Mm.
serial tech entrepreneur. And we all know that accredited status in the US alone, I think it's 97 or 98% of the population is excluded from, frankly, the most interesting and oftentimes some of the most enriching and rewarding investments. Yeah, globally, it's over 99%. Sometimes functionally, simply that there's just zero access or awareness of early stage investments. And if we look at capital markets themselves, North Americans, we have problems, and there are access issues. North Americans, Western Europeans, and other developed nations typically have access. Bitcoin brought together information and insight and awareness that allowed us to realize that there's an immense number of unbanked people. I think today, still 67% of the eighth largest economy in the world, Indonesia, is still unbanked. Just got back from Guatemala not too recently and find very similar situation there. They bank at their tiendas, their little network of convenience stores. And originally I thought that was all that was the matter with the financial world. And coming from venture capital, which is broken, and the CEO of Digitl is a former investment banker, we realized that everything is broken, all aspects of the capital formation life cycle of the issuer, but then the access points for the investor, which means everyone. Everyone in the world, in my opinion, is an investment buyer. We have some sellers, some issuers, some businesses, some product manufacturers, but everyone is a buyer, and everyone should be given the chance to buy. And that's what it comes back to, this disclosure concept. If it's a high risk early stage, disclose that. Don't prohibit access to that. And so we did a bunch of research, and to your question, a roundabout way of getting there, I just thought that the fundamental sort of awareness of just an inherent mindless unconscious exclusion that we take for granted, the accredited
Mhm.
and also the global situation and access to investments. Primarily, the biggest equities markets are in the U.S. Broker dealers are typically jurisdictional focused. The Toronto Stock Exchange serves via brokers, no direct access, typically Canadians. Nasdaq typically serves Americans via brokers, no direct access. And so again, this is built-in exclusion. How does a rural Malaysian, rural Guatemalan, rural Nigerian get access to Tesla? I didn't even know that was a problem until we really started looking into it. And it turns out that there's almost 2 billion unbrokered. There's over a billion unbanked, but there's 2 billion unbrokered. So we need people to have money. Money needs to be used to live. obviously, but people should also be able to put it in a place that can provide returns. And so one of our initial intentions early on was to solve the accredited issue and getting access to early stage investments. But then we realized that almost 2 billion people can't get access to any investment. And so I
Wow.
think Liquid has a sidechain of Bitcoin. And we do believe that obviously USD is the world reserves currency, and that will be the base of most of the markets for the foreseeable future. But our view and hope is in 10 to 20 years, Satoshis are the base of many markets, or at least interchangeable between USD. But we do believe that anyone, anywhere, at any time should be able to gain access to any market. And that Liquid provides that. The infrastructure, capital markets, again, like TD Ameritrade engaging Nasdaq, and the infrastructure in there with the D2C and the registry, that's a 6.5 hour a day, 5 day a week model, which is itself crazy. And it would require a significant risk or investment from a foreign dealer to engage that system off hours and then take the financial risk of offering that to what they would call unsophisticated investors. And so there's a
Yeah.
problem there that no one's tried to solve. Yeah, exactly. That no one has tried to solve until recently. And I think blockchain itself, pardon me, Bitcoin, and then Liquid were natural technological innovations that had to occur before any of that was really possible.
Hmm. Yeah, I mean, it's exciting to think about how much capital would be unlocked if we could offer a better solution to these people that are currently excluded from all these capital markets. I mean, it would be an explosion of capital being able to invest in all these different investments that right now these people simply don't have access to. And I wanted to bring up, we're talking about assets, different types of assets, stocks, bonds, like real estate, whatever you really want could technically be tokenized on the Liquid network. But maybe Samson, you could answer this. Like, how does this ultimately drive Bitcoin adoption? Like, how does this kind of this issuance that's occurring on the Liquid network actually help drive Bitcoin adoption? Kind of happening underneath that.
Yeah, well, I guess it depends on what your priorities are. Like, there are Bitcoiners that think that Bitcoin is the only thing, but
Yeah.
I don't think you can really discount the fact that there will be companies, and companies will try to raise capital, right? Capital markets are still going to be with us even in a hyper Bitcoinized world, because we'll still have people building companies and doing things that require investments. So the way I see it is that Liquid just is a financial layer anchored to Bitcoin. So you can't really create stocks on Bitcoin. You could try, but it's not going to work, just for the same reason something like Ordinals is doomed to fail, because you're still relying on this settlement network, which not is not fast, right?
Yeah.
And it is going to be very expensive. So there's no way that you could ever build a global stock market using sats and paying fees to anchor those. One of the people that I work with is one of the companies I work with is called Stoker, and they originally were building on Ethereum, and they quickly realized that this was a dead end, because they had to make changes to their registry of investors, and they wanted to also, much like James was talking about, give access to more people to invest in these things. So they want a low investment amount, like $100, but then they were paying $100 in fees to update their whitelist on Ethereum. So they quickly gave that up, and they started pushing more for Liquid. But it's just an example, like you'd have that same problem just doing it on the base layer of Bitcoin. So you need another layer on top of Bitcoin that can facilitate that. Now, it could be RGB, or it could be Taro. What are they calling it now? Taproot
Yeah.
assets after they got sued. But it could be something else. But Liquid already exists, and it's been running for 8 years, and it's very robust technology. And I don't believe everyone fully understands how much engineering and cryptography and game theory thinking has gone into Liquid development. But it is very, very robust, and it is very stable. So it is the best bet, I think, for this type of financial layer that people can use to create digital assets like stocks and things like that. And I think it has a direct impact on Bitcoin as well, because you can create financial products around Bitcoin. And one example is the Blockstream mining node that Blockstream launched, and that's just tokenization of Blockstream's hash rate. But it's a very interesting mechanism that you can use to get people investing into Bitcoin mining without a lot of the risk that you would get from, say, cloud mining, where you're just paying someone to host the server for you. You actually have the legal protection of a security. Maybe James, you can talk a bit more about this part, because I think it's really interesting, but bridging those two worlds, the financial world and the Bitcoin world.
Yeah, I can jump in and add that on the Blockstream mining note, because we know a lot about it, because we actually listed it on one of our exchanges. Really quick before that, I just want to mention on the Bitcoin part, one of the biggest selling features of Liquid Network was that Bitcoin is its money. Like that sidechain, Bitcoin is the money. And, I've been, like I said, a serial tech entrepreneur in Digitl, and its predecessor go back about 8 years. And we have just seen, I think probably most relevant to this idea are the grants that popped up with a lot of these new layer ones, and all the money that was flooded into these startups that unfortunately a lot of them took and now are stuck with legal obligations to these layer ones. I think, and I think it is in the best interest of the world, the planet, and our future that Bitcoin is a commodity with regulatory certainty, and everything else is a security. And so if you think about that, the networks themselves, it's possible, this sounds sensational, but it's very possible that regulators themselves, and even at some point nation states, because these networks are now very powerful, could deem these layer ones to be sanctioned economies. And regardless, with the money of the sanctioned economy or that economy being a security, how can you transact that as money? It's just not possible. So I think that both threat sanctioned networks and the money being a security, it really helped us to realize that Liquid was, again, almost the only option for us. I think Bitcoin, the Blockstream mining node, was a very interesting product that we were able to show the world theoretically, and most are still unaware of this. The fundamental sort of regulatory regime that was used at the core of it was somewhere in Europe, and allowed them to do a very novel thing that included blockchain, and that was fantastic. But it had some accredited, professional, sophisticated investor rules. So the primary, I think, was like 250,000 single unit, and the secondary, I think, was 1/100th, which was 2,500. And again, coming back to this idea of, well, first of all, Liquid can fractionalize, as Samson said, to 8 decimal points. It has 21 million units. It's basically a mirror of Bitcoin. And so we just sit there and scratch our heads and think, what a great product by a great company. And what Digitl wants to bring to market, way do we describe it, are products that people want by brands that people trust. And inside that, again, just a very, considerable but reasonable amount of investor protections and market rules. And so because of the legacy infrastructure, capital markets, we were able to stock exchange list on a national stock exchange a product which is the ultimate exemption, so global retail access. And we were able to drop the price of the Blockstream mining node to I think it was 1/100,000. So people could buy $2 worth of BMN. That is true democratization, and the ability. So accredited only in the European offering, and now it's at $2,500 per, and now it's global retail access. Every country in the world except for OECD banned, people are able to access it for $2, and we can fractionalize that. So we fractionalized it on the legacy side using, it's actually called depository interest. Most people know them as American depository receipts. We were able to legacy, paper, electronic, fractionalize, and then we used Liquid on the digital side to mirror that legacy fractionalization. So, at some point in the very near future, people are going to be able to hold fractional BMN, even though it wasn't actually even issued on a fractional basis, or I think it was issued to 2 decimal points instead of 8. But yeah, Blockstream mining was a very exciting project, and it really is at the epicenter. And we pursued Blockstream and just said, we have to do this. It just shows all the capabilities of of Liquid Network and all the supporting cast members like Jan3 and Digitl and Blockstream. And we have it up and we're beginning to develop the buy side. But my hope is that 1 million people hold $5 worth of VMN.
Yeah.
I
The
think, yeah,
sorry,
go on, Sam.
the other part is really just ensuring that the entire financial system can settle with Bitcoin and do it in a trust minimized way. So with Liquid, you can do these atomic swaps where you construct a transaction just like a Bitcoin atomic swap. But because you have these assets there, they're all on the single chain. So you can basically trade something without having counterparty risk on Liquid. And then the settlement is on Liquid Bitcoin, which is basically Bitcoin, which you can then peg out without having to go through a clearinghouse or a centralized party. You can just use a peg out key, like we talked about before, from one of the members. So I think this is going to potentially grow a lot of Bitcoin usage in settlement of these financial products and securities down the road as the ecosystem grows.
Yeah, we're talking about potentially trillions of dollars worth of transactions being denominated in Bitcoin. I mean, that could definitely help drive adoption if this thesis plays out. And James, you talked about some of the benefits that Liquid and Bitcoin can bring when you combine it with these capital markets. And you talked about the Blockstream mining node. It could be fractionalized, could allow global access, cheaper. You also said that you guys recently listed like Nasdaq, I believe, like the top 25, and so you have these different assets that are being tokenized. Can you talk about maybe why you guys decided to list the Nasdaq and that whole process, but also just in general, why should people get excited about tokenizing assets when you compare it to just our normal what everybody's used to buying stocks on like a their traditional brokerage account? What's some of the benefits of say like quote unquote tokenizing all these different asset classes?
I think what's really interesting is that what gets media attention is the 1 billion unbanked, 2 billion unbrokered, financial inclusion part. And that is very, very important. Something that's really, really exciting to me and I think is as potentially disruptive is what I alluded to earlier. Venture capital is completely broken. There's a handful of people moving not only a significant amount of money, but placing capital into early stage companies that then become our reality. These people are literally creating our future reality and completely, not your average global citizen demographic. So we are living that demographic, call it what you want. That becomes that reality. We live it and they continue to funnel money in. They also really prey upon, beat down the founders and their term sheets, extract value in that way. Also abandon them. This 90% failure rate taken as a matter of fact, I think that's absolute nonsense. That is a VC paradigm. We need an issuer paradigm. And the same thing with investment banking. I call the VCs predators and the investment banks parasites. They are just extracting value, not only from the issuer and the founder all the way along, but ultimately from the ultimate investor. And we all know that a lot of these stocks dump once they're major exchange listed. Because a lot of the value has been extracted. And they're in cahoots or coordination with the late stage founders and late stage executive teams as well. So I think moving that away from VC investment banking models to issuer models is the path forward. And the point I'm trying to get to, and we actually created a sell side software where issuers, and the idea is you wake up in the morning after a night at the pub, you're like, oh my God, I think I created a business last night. Call everybody. Are we going? Yeah. Okay, cool. First thing we should do is figure out how we're going to bring in some money. Your sister got any money? Your dad? We all have friends, family, and fools around. Let's get that in. We want people to create an issuer account and issue digital securities on Liquid Network day one. And then what we want them to do, and we want them to, and our software does that. You can create a wallet, give it a name, you do your KYC, mom and dad, and they give you $5,000 and then determine, depending on how many shares you're selling, you allocate the shares and all of a sudden you're a real business. It's a real thing. And you have this cap table management software, which we think is a commodity. What we're excited about is this idea of helping people form capital better. We talk about cheaper, safer, fast. VC and investment banking are expensive, not safe, and very slow. So then that's because it benefits. We go back to the initial comment of the system's corrupted to benefit a few. We want to benefit many. We want the issuer and the investor to be the center of everything. Everyone comes in, provides services, gets paid, but the issuer, the buyer, and the seller are the ones that are enriched the most. And so this idea of an education, most founders, based on my experience, when I've invested in over 100 early stage companies. Typically, they spend the first 2 years surviving. If they're lucky enough to survive, they spend the 3 years fixing the mistakes they made administratively, legally, and financially in the first 2 or 3 years. And a lot of that is because you have to prioritize survival, but it's also because you have very bad guidance, very bad advice, and you can't afford good advice. So I think from a capital formation standpoint, a financial security standpoint, stability standpoint, early education is critical. So this idea that you issue liquid network digital securities, you get educated on seed A through C, Series A through E, you're able to access crowdfunding and other sorts of like Reg D fundraising, which is a fairly simple process, but you need some good support to do that on your way to a major IPO and a major exchange listing. That is the objective. It's not to provide super rich, super lucky founders with capital markets opportunities. We want to create something, and again, Liquid Network's the only chain that we can see that can help us do that. We want to create, if everyone knows the micro lending platform Kiva, where you can lend some money to, an entrepreneur, a taxi driver in Jamaica, a goat farmer in Eastern Europe, whatever, and really enable something there. We see this as the Kiva for capital markets. There's no good reason why we can't do 50,000 IPOs a year when really there's only a couple hundred and only in major jurisdictions. So that issuer-centric focus is going to emerge out of digital. It's not just a buy-side investor financial inclusion. It's a financial protection from the issuer side. These are the innovators, the inventors, the value creators. These people deserve to be protected and guided. And I think a self-serve platform really is the only way to do that, issuing directly on Liquid Network with the money being Bitcoin. So to answer the question around Nasdaq is that while we prioritize serving these early stage investors, and while I think that getting capital to the world's best innovators is the way to solve the world's biggest problems, not through big government bureaucracies, I think directing capital to them, supporting them and creating amazing products and services that solve our crises, and they seem to be growing in numbers, is the way to fix the planet. I think that people need other investments. They need digital gold. They need literally an ETF like GLD, and they want to access some of the bigger names, Tesla and Google, and even what the kids, the apes love, GameStop and AMC, et cetera. So we, and one of our closest partners is Jamie Rogozinski, the founder of Wall Street Bets. And he helped us really understand that we don't want to be trivial, but this idea of a meme stock is really important. It helps activate people. It gets them excited. So we have all the major tech stocks on one side, MicroStrategy and, like I said, Facebook and so on. We just think that people want some of that. And then we have all this early stage stuff that includes the Blockstream mining node and includes Wall Street Bets' insider portfolio, ticker INSDR, which was known in the media before as the Pelosi portfolio.
Yeah, the Nancy Pelosi tracker.
Yeah. So for $1, you could buy this today. For $1, anywhere in the world, an investor can get access to Nancy Pelosi's publicly declared stock holdings. And That's the Wall Street Bets product. And so again, playfulness, but a financial intelligence. We don't know how, but she's a very good investor.
She's great.
So
one of the best.
Yeah. So that we went out and made sure that we had, again, things that people really wanted and a very broad basket of products. And, we're one of the new products that we're standing up right now, and Samson's aware of this, and he's got an extraordinary product as well. That's similar, and there's lots of opportunity for this, is a Wall Street Bets branded investment product called El Sal. And that is, the ability for anyone in the world to get direct access to sovereign debt, where the current paradigm, again, corruption, is that the only place a sovereign nation can go is the IMF, or the World Bank, pardon me. And the IMF comes in and tears apart the country once it defaults on its debt. And Samson knows way more than I do on that. We created a product. We found where to buy these bonds. Very difficult, like one or two brokers, minimum $50,000 funding, and we're buying these up. You can buy them on the exchange and direct retail access. You can vote on a government doing amazing things, and that's exactly what everyone should be able to do, not just World Bank and G20 nations.
Man, there's a lot to unpack there, and I love so much of what you just said in terms of basically driving innovation by getting capital in the hands of entrepreneurs. It sounds like one of your main goals is basically connecting buyers and connecting issuers, removing some of these bloated costs, these intermediaries to help drive innovation. And I just loved everything you just said. So you got me really excited listening to that. And anything that allows a sovereign nation to better raise funds outside of the IMF and World Bank. I mean, that's just how much these countries desperately need that. That's incredible. So, Samson, you were kind of, I mean, on your Twitter profile, you said you're the architect of these bonds that El Salvador have been working with, both the volcano bonds as well as some of these other ones. Can you go into any details about that? I mean, I know maybe you have some things you can't talk about, but I'd love to hear any details that you can share with us.
Yeah, I can talk about the original design. I'm not that involved with their day to day right
Yeah,
now,
yeah.
but the the reason that I picked the liquid network for those bonds was because, like James was saying, you can cut out a lot of the parasitical leaching of capital raise, like for a bond issuance. So typically with traditional bonds, you have to go through the traditional channels, and much like a bank, there are tons of fees involved with all these counterparties and organizations that facilitate these bond raises. And also, the places you can trade them on are very limited as well. But doing it on Liquid, you would allow for direct peer-to-peer trading. You could have self custody, and that's a restoration of something like a bearer bond, which has been destroyed. Right? People don't want those anymore. The people in power and the legacy system don't want bearer bonds because that means they can't surveil. But you can get that back to some extent with a liquid bond token. Um, but the biggest thing is really just elimination of fees, and you can also do it in a far more efficient manner. So the bonds had a dividend payout, which would be done on Liquid as well with USDT. So you can have a smaller investment. You can invest, $100 and get a dividend payout all through this system, which you could not do with a traditional structure because there would just be too much friction and the amounts are too small to pay out, $1 dividend a year or something like that. So the technology enables a big change in how sovereign debt can be raised and how it can be managed, and uh, how people can interact with it. So I think there's a big paradigm shift that's happening. But again, the big thing is you can get billions and potentially trillions of dollars settling with Bitcoin if you can make this entire system take off where they're issuing on Liquid.
Yeah.
And to touch on one more point that James mentioned earlier, there is clarity here because Liquid is not a security. There is no ICO, no token to invest in. It's simply a Bitcoin sidechain, and you pay for fees using Bitcoin. So there is a clarity there that is not existing in other frameworks. Like imagine a country did a bond issuance, or even a company did something on Solana. Well, the SEC just said Solana is a security, and like James is saying, most of these things probably are securities too. So it's just corrupt all the way down, and you can't build a new financial system on something that is corrupt. You have to build it on Bitcoin and on Liquid, which allows for financialization of Bitcoin. So
Mhm.
yeah, that's my commentary on
Yeah.
what James was saying there.
Yeah, I mean the regulatory clarity around Bitcoin is huge. I mean, like you said, I mean you'd just be trading one corrupt system for another one that's prone to corruption and manipulation, whereas Bitcoin doesn't have any of those risks, and so it makes a lot of sense to me. I mean, Samson, you talked about the opportunity here. If the Lightning or Liquid network starts to take off, it has been around for a few years. So what are people missing about it? Like, this all sounds really fascinating. And you said that there's been so much work on the back end to build this out. And so what are people missing? Like, what's your big case for why people should be interested in liquid more, why people should be using liquid more, and what maybe people are missing here?
Well, I think people are always interested in the shiny new thing. And Liquid has been around for some time, and it grew organically, much as Bitcoin did. The original use case was inter-exchange settlement, and that evolved into digital assets like securities, like Digital's products. And I think people are just not really aware of all that you can do with Liquid, and they don't appreciate Liquid too, because a lot of Blockstream's R&D is done on Liquid. So SegWit was first deployed in Liquid. I think Taproot, a lot of that development happened on Liquid as well, or on Elements, the underlying software that powers Liquid. So Liquid is a network. The software itself is called Elements. But most people aren't aware, and they just see what is hyped up in the media. And I think a large section of the industry is still focused on a lot of crypto scams, and they're incentivized to do so because you can launch a security and say it's not a security and say it's decentralized instead of building real companies and following existing regulations that are designed to protect investors. So I think Liquid usage is increasing. We've seen the transactions boost in the past several months. Part of it was to do with congestion on Bitcoin's main chain, but I think it's also more and more services are coming to launch on Liquid. Bolt's Exchange is one of them. They're doing Lightning Liquid swaps, and that is another important part of that equation because people often forget that if you want to rebalance a channel or do something with Lightning, you still have to go back to the main chain. But with these types of swaps that Boltz is providing, you kind of use Liquid as an intermediary layer. So the two technologies work very well in tandem, and actually offers a big boost in privacy because you're going from a Liquid confidential transactions into Lightning, so it's all confidential. And
Well,
people don't really fully realize that yet, or they don't care about privacy. So I think it's just a matter of time. But I feel like Liquid is coming into its own because more and more companies are launching products that people can use on Liquid, and it's a bit of a democratization. People don't get interested in something until it's in an app on their phone, and then they can use it. So one piece of FUD that's often thrown out there is that Liquid is no one uses Liquid. It's very low transactions, but they forget that Liquid is a settlement network, and it's used by a lot of traders taking advantage of it for arbitrage opportunities. So if there are just a couple hundred Liquid transactions, first you don't know what those transactions are. It could be 100 bitcoins moving around a couple times, but that would be massive in terms of utility and value for the network. But you can't see that because they're confidential. But also, the number of transactions does not matter because it's not a payments network. It is still a settlement network. So even one transaction a day moving 1,000 coins means the network is functioning as it should be.
Hmm.
And I think people just have to get around that. It's almost like the FUD that we've been served for Bitcoin, that Bitcoin has very low throughput. It's being digested in a way and somehow directed at Liquid, saying, well, you don't have that many transactions. But that's the exact same FUD people are throwing at Bitcoin. And you're missing the
Huh.
point here that there's a lot of things you can do with a few transactions a day. But, anyways, the point I'm trying to make is there are more and more companies coming out with products that people will use. So what we'll see going forward, either it's securities or swaps or stable coins on Liquid, we're going to see more and more uptick of usage on Liquid, especially as we get more and more regulatory clarity on all the shitcoin chains that are powering various networks, right? For us at Jan 3, we're launching a new wallet called Aqua. It's actually a wallet that I started at Blockstream, but we've taken over. But one of the things is it's a Bitcoin and stablecoin wallet. So you have Bitcoin, Liquid, and Lightning as a layer 2 wallet, and then you have Tether or USDT, which is another wallet in the interface. And it can do this because it's a Bitcoin and Liquid wallet. And what we're hoping is to get a lot of the Tether volume off of Tron and Ethereum and into Liquid by pushing it aggressively in Latin America, because those markets already use Tether and USDT a great deal, but there is no alternative to them to easily access USDT on Liquid, and that's what we're hoping to change.
If you don't mind, Sam, I'd love to add really quick to what Samson said. And it's funny because I just thought about this for the first time, and I think it helps me to explain some of the reason for what people say is a lack of traction. I think, to Samson's point, that's largely incorrect. But why hasn't it, blown up overnight? Well, I mean, look at Sol too as well. Look at all the network outages. I mean, this software is sophisticated. Like I said, it is built really, really well, and it's built to last. It's built to be stable. It's built to be secure, and it's not thrown up overnight with some pre-mined junk coin and sold to enrich the founder and never do anything. And I mean, it is just a real piece of software. And again, Bitcoin's taken 13 and a half years to get to today, and I think there's a reason to say we haven't gone far enough. We don't have enough products to go to market. Grandpa still can't use it. So if that's the case, 4 years or 8 years or 2.5, however you decide, whatever you decide is Liquid's lifespan, it's still very, very young compared to Bitcoin. And here's, to me, the most critical component. Bitcoin really is a B2C that requires some intermediary services in terms of getting it, holding it. And that's actually where the attack vector, this is where, as we see with custodial crypto exchanges falling apart, and the investor, the retail user holding the bag. That's the problem. Is and built properly, Liquid really is a B2B to B2C, where you need an issuer. So you have a sidechain where an issuer needs to access it. They really need the guidance of another layer to help them issue, administer, move, depending on what the use is. And Samson mentioned a ton of use cases for it, but we need that intermediary to what is kind of an intermediary to a customer. So you have Liquid, third layer provider for whatever that issuer wants, the issuer, and then the user, whether that's a private market sort of user or holder of a private security or someone that's actually trading on an exchange. It's a long distance. And so I think building in that middle portion of enterprise software builders dealing with businesses, then finally the user, it's not surprising that it's taken this long. And I do think that one of the things, and giants at Liquid and the people in the Federation, extraordinary people, building extraordinary things that will actually shift the permission world, where we do need to know who the issuer is, and there needs to be some controls in place. I think one of the things that Digtl bet on was that to animate Liquid Network, you needed an actual real capital markets infrastructure, meaning licensed, registered entities with actual professionals and college and university degrees, people that engage with the regulator, engage with the monetary authority, engage with the ministers of finance, people that are actually operators within capital markets, and not just a pre-mined, and all that stuff that comes along with that. That is a lot of people, smart people, with low risk tolerance, with a high risk suggestion that you have to get in line. You have to get, have to understand it, have to buy into it. And so I think that we're going to see, my view is that 2023, near the end of it, we're going to see real Liquid Network transaction volumes emerge. We know of a couple multi-billion-dollar issuances from some brands that people know really, really well. And those are going to start to creep their way into exchanges. And as Samson said, even some peer-to-peer swap platforms like SideSwap. That drip, drip, drip flood scenario that we see in all other technologies, that emerging exponential sort of as we move into the detectable exponential leap on that curve. I personally, and I've been saying digital securities 5 years ago when we first started talking, I was like, we are years away. I'm not someone that's just joined and been like, yeah, this year. I think we're going to see it at the end of 2023. And I think 2024, things are just going to take off because the infrastructure is finally there. And that was the hard part.
Yeah, I just want to add to that, because Liquid is not a security, there's no ICO, there is no marketing budget like some of those projects out there that have raised hundreds of millions of dollars to create artificial demand, right? They raise the money by selling an unregistered security, then they give out grants, have hackathons with big outlandish prizes. There's none of that. All the growth on Liquid is, as James is saying, it's smart people that see the potential, want to build on Bitcoin, actually doing something and growing their services organically as well. So it's organic on top of organic, not fake on top of fake, like the rest of the ecosystem. And that means it's going to take time because you can't fake organic growth. It's got to happen naturally. And much like Bitcoin, that is a stronger growth mechanism than the fake stuff. Um, I wanted to add one more thing too. Just I was thinking, what James was talking about, the Wall Street bets guys. I think investors and communities like that are going to realize that this is the future. Things that digital is building, those assets are what they should be looking towards, because everything else is a rigged game. If you're playing on the traditional legacy system, trading traditional stocks, it's completely rigged. They can shut it off. They can print more of it, sell more than they have. They can do all sorts of things. But with these securities, they're verifiable. You know how much someone is issued. They're trading 24/7. They cannot shut down the market at any point. So it's a far superior model. And I think that pivotal moment of Wall Street bets and GameStop is a defining moment at which the ordinary retail investors understand, you know, I can't really win at a rigged game. The playing field has to be level. And this is also going to power that shift into the stuff that James is building on top of Liquid.
Yeah, we have anti predatory protocols at a couple of our exchanges as SRO, self-regulating regulatory organizations. There's an ability to make a better model within the existing regulation. And so what Samson points out is so critical. I mean, regulation, there's an idea like money that it's bad. And I think that there's a good argument that all the current regulation is not productive and is not actually in line with the mandate of protecting investors. I think that that's a very easy argument to make. The idea that we throw it all out, we have no regulation, also, I don't think is the smart path either. I think a collective, the participants in the network secure the network. We have an algorithm, an oracle that applies, network rules is the path that we want to head along. And I think, regulators, I think we sat down with 6 or 7 from various countries, and they all acknowledge, hey, if that would work better than human intervention, then we would naturally gravitate toward that. We'll see if they do that. But what's insane is that the existing capital markets are, when we talk about corruption, I love the idea of corruption because that's like an honesty and also an engineering. So it's corrupted from an integrity, stamp, and integrity also is the structural integrity and also the honesty. Both are corrupted wholly on an integrity basis on both sides. Both the honesty and the engineering are wholly corrupted. When you look at what Jamie and Wall Street Bets were able to do and bringing that to light, where it made it to Congress, and the Congresswoman and man said, why did Robinhood, did you remove the buy button? How can you take an entire side of this war out of the war? One company. And there was no good reason for that. Well, they talked about liquidity and how they had to pay it back. And that whole thing of like, oh, how are you trading billions of dollars and only posting 2 to 5% of that? Which blockchain, DVP, this is real-time gross settlement stuff. So there can't be a loser, a Lehman Brothers, that just says, well, we bet it all and we have no money. And now who pays for that? Taxpayer, the retail investor, et cetera. So I think that this idea, and what also was exposed was naked short selling, not having to take the opposite position on it to resell it. There was GameStop and others as well, 125 to 150% of the shares sold short. How is that even possible? Well, it's actually, no one's gone to jail, just like the 2008 mess. No bankers went to jail. Iceland's the only country that likes to do that, I guess. A bunch of people should have gone to jail probably, but the reality, and this is the most upsetting part, is that we don't even know that they actually broke the rule. We don't know that they broke the law. They broke some rules. Did they break the law? Not sure. How can you sell 150% of the shares? How is that even possible? The reality is that I don't know how that's ethically possible. I think it's ethically impossible. I don't even know how it's regulatorily or legally possible. But the reality is that the broker engages the user via terms of service. And we all know we just clicked yes to that. And it's a list, 37 pages that tell them all the ways they're going to take advantage of you. One of them is your long position can be someone else's short position. And we are going to sell that to your again, the opposite side of the war. And that's what GameStop saga became, an actual war against the hedgies. And the brokers, the system allowed the hedgies aside from payment for order flow and them knowing exactly the positions people were taking, they were able to maximize their short position with their multi-billions of dollars and basically collapse the buy side support. And that is just not, in this day and age, shocking that it exists. But as Samson said, we have to be grateful that we actually got to the point where this came to the surface. This has been going on for a couple hundred years since they were trading shares under the trees in Manhattan. Now we know that this is organized corruption, organized crime, effectively. And again, to Samson's point, Liquid Network and the infrastructure of Bitcoiners that believe in fairness are going to recreate capital markets in a way where that is simply not possible. Self-custody, self-sovereign ID are components of that for sure.
Yeah, wow. A more fair, more transparent capital markets sounds good to me, and infrastructure that can't be manipulated and co-opted, and where the winners and losers can't be picked. That sounds good to me. But we're out of time, guys. I mean, I learned so much in this conversation about Liquid, about Digtl. If there's any parting comments you guys have, like where do you want listeners to go to learn more about what you guys are building right now? Samson, if you want to talk about what you're building at Jan 3 a little bit, let's just finish up with like a minute or two, just where you guys can point people to learn more about your work. Let's start with James and then go to Samson.
In the show notes or anywhere we can put a link, we're going to put a link to a digital web property where you can get a $10 gift card. And what I'm begging you to do is to take that $10, buy one BMN at $2, two $1 inside Wall Street Bets Insider, and buy an AMC share on Nasdaq. And just know that is Bitcoin capital markets. So these are capital markets in a safe environment. And I'm just really want people to participate, to get involved.
Yeah. For me, if you're interested in a wallet that supports Bitcoin and stablecoins, and of course Layer 2, you can follow us at Jan 3 for now, and you'll find out when it's launching, hopefully in the next 2 months or so. Our Twitter handle is Jan3com, and we're also on Nostr.
Great. Well, we'll make sure to put those in the show notes. And just thanks for coming on the show, guys. Once again, learned a lot. And it seems like what you guys are building will not only do wonders for financial inclusion and capital markets, but also just for Bitcoin's adoption as well. So thank you for coming on, and have a wonderful day.
Thank you, Sam.
Thanks, Sam.
If you care about your financial future, you need to check out a couple of our offerings, including Swan IRA and Swan Private. Swan Private is our white glove concierge service where you get a trusted partner on your Bitcoin journey. We offer all kinds of education and research projects, as well as exclusive events to our Swan Private customers. Check it out today at swan.com/private. Also, Swan IRA. Swan IRA is the best way to gain exposure to real Bitcoin in a tax-advantaged account, like a traditional IRA, a Roth IRA, or rolling over your 401k. So if that interests you, check it out at swan.com/IRA today.